15 minutes till market close. Let's see what happens.
Flex shares are carefully constructed to go beyond ordinary ETFs and strengthen client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully. We see engineers simulating the future to improve today. At Emerson, our digital twin software makes power plants smarter, helping facilities optimize operations and increase worker safety. Emerson, consider it solved.
Hey Frank, our workers' comp insurance is expiring. Should we just renew it?
Yeah, sure.
Hey there, small business owner. Pi Insurance here with some sweet advice to stop you from overpaying on workers' comp. Try Pi instead and save up to 30%.
30%, really?
Get a quote in 3 minutes at easyaspi.com.
Wow, that is easy.
So, need another reminder?
Oh, yeah.
Investing in our experience, our expertise, our character. I invest in the same low-cost, diversified.
Reed Hoffman and Game Changers in Innovation. Register now at cnbcevents.com/work.
Charlie, which of these apps do you like?
So many to choose from. I think I found a winner.
Huge selection. That's why people love Mercedes-Benz and Gilbert.
With hundreds of new and clearer vehicles in stock, if you can't find it at Mercedes-Benz and Gilbert, you probably can't find it.
And we've expanded our lot to hold even more. Come see why we're number one.
I think I need to test drive a few more apps.
Good idea.
Visit the giant Mercedes-Benz Gilbert.
And tell them Charlie sent you.
Meet world-renowned artists at the Arizona Fine Art Expo. Stroll throughout 120 studios filled with spectacular art. Watch art progress before your own eyes. Enjoy paintings, bronzes, copper, wood, glass, stone, and clay sculptures, scratch board, jewelry, and more. The best place to buy art by Phoenix Magazine. We practice strict COVID protocols, masks, social distancing, and hand sanitizers throughout. The Arizona Fine Art Expo opens daily 10 a.m. to 6 p.m. through March 28th at Scottsdale Road in Joe Max.
We built our 5G nationwide so millions of people can do what they love and right 5G quality. And in parts of many cities, we have ultra wideband, the fastest 5G in the world. This is 5G built right, only from Verizon.
Hiring? ZipRecruiter finds us the best people for the job.
4 out of 5 employers who post on ZipRecruiter get a quality candidate in the first day.
With ZipRecruiter, we get hiring results.
Try it for free at ZipRecruiter.com/index.
This is how you become the best.
Don't be mad. Get E-Trade and take charge of your finances today.
The Market Zone is sponsored by E-Trade. Trade commission free today with no account minimums.
There it is.
12 minutes. Morgan loves this music.
I'm too.
12 minutes after the trading day, we're now in the closing bell markets and commercial free coverage for the action going into the close. Market commentator Mike Santoni is here to break down these crucial moments of the trading day, and today we've got Ariel, Vice Chairman Charlie Barinsko with us as well. Things up with the market stocks at session highs, the Dow and S&P on track for record closes. Definitely a value day over a tech day, and I will come to Charlie Barinsko first for that. Charlie, the key question really is that the same people that stopped you in the street to harass you about Viacom doing badly, do they now stop you and pat you on the back because it is up an astonishing 500% over 12 months?
Thank you for asking. I appreciate that. They do give us credit for this. This is interesting in that there are a lot of people that were very negative on Viacom CBS. People were worried that digital direct TV there was a lot of cord cutting going on, and that people thought that was really going to hurt CBS. Obviously, the sporting events all got closed. There was no Masters. There was a lot of pessimism out there, and that's something that we really believe in, is seeing pessimism, seeing a big short position as a positive. Because if something good happens, you can get this kind of reaction, which you can't get if everybody loves the stock. So I will admit, we did not think it was going to go from 10 to 90, but we were optimistic that
reduced the position though now a little bit?
Yes, I have. And I'm sort of like Bruce Willis in Die Hard 2, where he's waving off the incoming flights. I gotta wave people off here. If you own it, it's okay to own it, but I can't tell you to come in at these levels. This is now trading with a lot of optimism, frankly, and I think it's still being helped by that short position. So we still own it, but we have reduced our position.
All right. Well, the S&P more broadly, Mike, it's flat going into the final 10 minutes of trade here right now. But if you look at what's outperforming, it's industrials, but it's also utilities and real estate. And we've got treasury yields on the rise again. What's going on?
Yeah, it's tough to necessarily say if those two things are integrally linked at this point. It's funny because we focused on every single tick of the 10-year yield. I think if you have to broaden it out and say we're really talking about going from 1.5 to the low 1.6s, and so it doesn't necessarily upend absolutely everything. And those groups that you mentioned right there are probably just getting help from being laggards and very under-owned right now. In fact, B of A had some work that said that the proportion of the S&P that's in a combination of utilities and staples is basically at a record low. So who knows what the mean reversion is saying. But in general, it's a cyclical day. It's a day when people are taking heart in the fact that the economy, all the indicators are at least coming in incrementally slightly better than expected or happening sooner than anticipated. It's a good step.
Yeah, Charlie, I want to get your thoughts. I'm just reading your notes here. You say you need to stop talking about the stock market. Why? It is the stock market. Are we saying that the rotation means that there's very big differentials in terms of where the opportunities lie right now?
Yeah, you hear people say, is the stock market overpriced? We heard that a lot last year. The fact was there were certain parts of the stock market, large cap growth being especially overpriced, they were. But small cap value was very cheap, and the two have not performed in line this year. Now, this year, small cap value is crushing the S&P and crushing large cap growth. So you really do have to talk about specific parts of the market and not paint with too broad a brush.
Okay, well, Tesla and Elon Musk are getting sued over his tweets. Phil LeBeau has the details for us. Phil.
Morgan, this is a shareholder who has filed this suit against Tesla, basically saying that, look, it exposes the company to liability if the tweets were not pre-approved as part of the SEC agreement. We haven't heard a response from Tesla about this. Didn't have a whole lot of reaction in the middle of the day, but this is a day where we had a lot of action when it comes to EV stocks. Take a look at Lordstown Motors. Earlier today, Hindenburg Research came out and blasted Lordstown Motors, essentially said that it's been misleading investors all around what happens with the pre-orders that they are announcing, the reservations. One quote, the company's orders are largely fictitious and used as a prop to raise capital. By the way, we reached out to Hindenburg as well as to Lordstown. Lordstown said, yeah, we're going to make our CEO available for a comment. Still waiting to hear from him. Steve Burns knows our number. Hopefully we will hear from him soon. Finally, take a look at a couple of the EV stocks that had a mixed day, a little bit under pressure as people are looking at this sector and saying, okay, which of these stocks do we truly believe in terms of the startups, and which ones they still need to prove themselves? Guys, back to you.
Phil, thanks so much for that. By the way, speaking of electric vehicles, Citigroup's Jim Suva out with a bullish note on the Apple car, saying the debate around whether Apple will enter the automotive market is not one of if, but when, and to what extent. He adds that it could drive Apple to a $3 trillion market cap company. Meanwhile, Morgan Stanley's Katie Huberty saying Apple's recent pullback is a buying opportunity, pointing to iPhone demand. So a big new product and a big current product there being discussed. Mike, Apple and Tesla, whether we're talking about EVs, both coming back again today. Tesla's still markedly higher on the week, but Apple another leg of the week.
Yeah, they keep these big tech stocks, the real top NASDAQ 100 names, continue to act as if they still are a little bit crowded or a little bit over-owned, or maybe that essentially nobody wants anything that's not really geared to the cyclical economy right now. They got a reprieve recently. Apple is kind of interesting because it's down 15-16% from its highs, but it doesn't really break back into cheap territory where it traded for a long time. To me, the more compelling argument here is much more, the Katie Huberty idea of, look, this is a massively profitable company, we're in an upgrade cycle, everything you can see in front of you is actually looking like it's relatively positive. You decide which multiple to put on, as opposed to they're going to have an EV entrant sometime after 2024, and maybe we should pay for that today.
Charlie, what do you think of Apple or even Tesla, or just the impact all of this is going to have on autos? Are there opportunities here from a buying perspective when you look at the stocks?
These are great companies. They're bad stocks. This reminds me of Microsoft in 2000. For the next 12 years after 2000, Microsoft doubled their earnings and the stock went down 30% because it started off as too expensive a stock. That's what's happening with Apple and Tesla, and it just has to be repeated. Interest rates going up is very hard on growth stock valuations. We're still at only 163 on the 10-year. When that goes up, and it's going to go up, that's going to be a lot of pressure on these kind of names.
Yeah, we're going to get into that conversation a little bit more in just a minute. But first, we will discuss whether Hyundai will be a part of Apple's electric vehicle plans when we are joined by the automaker's North America CEO. That's coming up in just a few minutes. Meanwhile, AT&T is showing a very bullish outlook for its streaming business. Julia Borsten has the details. Hey, Julia.
Well, Morgan, AT&T upped its guidance for HBO and HBO Max, saying it expects the service to grow from 61 million subscribers at the end of last year to between 120 and 150 million subscribers worldwide by the end of 2025. That's up from its prior forecast between 75 and 90 million subscribers. Now, what's driving that growth? Well, in June, the service will launch in 60 international markets, and they will introduce a lower-cost ad-supported service as well. I spoke exclusively with Warner Media CEO Jason Kyler.
We're going to price it in a manner where the amount of revenue we're able to get from marketers actually exceeds, by just a slight little bit, what you see on the ad-free side of things when it comes to profitability. So it should be slightly accretive to our business over the next decade and beyond.
Now, Kyler says that their theatrical strategy, some films will continue to debut on HBO Max the same time they're in theaters, and some post-2021 will have an exclusive theatrical window once again. Morgan?
Julia, meantime, we've got this report from The Information that Netflix has recently explored licensing some of its movies and series to other outlets. On the one hand, it feels like, oh, it's about time for all the content they're creating, and on the other hand, I think it kind of really speaks to how blurred the industry is becoming, and the table's kind of turning.
So, Morgan, I reached out to Netflix. They said no comment, but what this report does is it 100% solidifies the fact that Netflix is a Hollywood behemoth. It is a studio, just like all of the traditional media giants that are trying to move into streaming. Netflix has the power and heft to now sell its content to the traditional media giants as well. So certainly a blurring there, Morgan, but also it really shows the scale they have in terms of production and also the potential for them to monetize their content in different ways.
But presumably, Julia, they'd only ever want to sell it to a traditional cable or normal TV company, not a rival streaming service.
Presumably, and also I think the one thing to keep in mind is the reason they haven't done this yet, they certainly are producing plenty of content. The reason they've been keeping it for themselves is their number one priority is to build their subscriber base. And of course, this is something that's important not just here in the US, but to have that content to build a subscriber
Here's my updated portfolio. Got some AMC calls. I bought some GME calls right before expiration just because they're super cheap. SPY puts for June, Tesla puts for September. That's it.
Advancing to declining volume New York Stock Exchange. So again, it's a kind of victory for the majority of stocks as opposed to the hugest small number of stocks. Take a look at new highs and lows on the New York Stock Exchange. Just a vast, lopsided, highs over lows type number. Now, keep in mind, 1 year ago, we were, vastly low. We were right in the meltdown. We're pretty soon going to be we have like an 80% gain from the March 23rd low. So that's not surprising, but at least it does kind of forestall one of the potential negative technical factors. Take a look at the volatility index is giving way a little bit. 21, it has backed off to that. We have had some intraday volatility that's kept it above that 20 mark. Maybe if the market can clip to new highs, we can finally breach it. We haven't really done that since the COVID crash moment.
Yeah, that's right. So we are just taking a look. We've got less than a minute to go here to the end of the trading week. Stocks are mixed, as you just heard. A record intraday high for the Dow. The S&P is slightly higher now, up about 0.1%. The Nasdaq back under pressure. It's down about 0.6% right now. Why? Treasury yields rising again. We've been talking about it all day. The 10-year yield touching a new 13-month high, edging closer to that 1.65%, although it's come off a little bit. Tech communication services, the two sectors in the red, unsurprisingly, perhaps given that inverse correlation between tech and growth, and then of course The best performing sectors, industrials, also utilities, real estate, which tend to be more rate sensitive still for the week. Strong gains for the Dow, the S&P, and the Nasdaq. The largest in 5
I'm
weeks.
surprised that's all that happened. I really thought there'd be more movement in GME and AMC. But it looks like next week's the week, boys. I don't freaking know. I just know that we're covered now. Now I'm good for, like, there's no way I don't make $10 million by September. Whether it's Tesla or the SPY or AMC hitting by June. By June, I'm rich. There's no question. But I think it's all going to happen a lot sooner. I'm losing most of my GME. I got a couple March 19th, so that's good. We'll see what happens. Unbelievable. They managed to hold it down for a whole nother day. Friday's the day to drop the bad news on the people. How much longer are they going to wait? It's wild. All right, guys. Good luck.